Today's agenda, we've got a handful of bullet points here for things that we're going to cover in terms of closing the existing 2017 year and what we need to do to prepare for the coming year for 2018. So we'll talk a little bit about disaster recovery plans. We'll talk about doing your physical inventory, taking care of 1099 payments, and then pruning some data should you wish to do so before wrapping up the 2017 year. And then what we need to do to get ready for 2018, setting up the GL fiscal calendar if it hasn't been created, the inventory calendar if that hasn't been created yet, and we'll talk a little bit about Sage fixed assets or FAS, as well as some things you might want to look at in terms of user security. So first area I wanted to focus on is disaster recovery. This is one of those things that people tend not to think about until it's too late. So we just wanted to take this opportunity to give you a reminder. The quote that's up the top here, it wasn't raining when Noah built the ark, but he knew the storm was coming. Let's just assume that a storm's coming and be ready for it and hope that we get proved wrong. So a couple of things that we want to talk about regarding disaster recovery plan, which we abbreviate ERP. You want to make sure that you've got replacement hardware readily available. In worst case scenario, if you, God forbid, have a fire, the building gets hit by a hurricane, what have you, you want to make sure that you're able to get your business back up and running as quickly as possible. And that means hopefully having either a co-location facility where you can have additional hardware ready to spin up as soon as possible, or having some other off-site means for spinning up another server should you need one. Very important to mention that there's no such thing as too much communication. And by that I mean we want to make sure that you have readily available all the critical contacts for situations that may arise, those ranging from not only your hardware vendors and software vendors to get your systems back up and running, but also your insurance contacts, banks. All of that information should be kept in one binder that you've got readily accessible, that multiple people have copies of, so that if one person's not available, somebody else can pick up the ball and run with it. And you want to make sure that you've got a checklist of the things that need to happen in the event of a disaster, including not only what needs to be done, but who the responsible person is for carrying out each of those tasks. So this is just a good time to remind you that if you don't have a disaster recovery plan in place, it's a great time to get one off the ground. If you do have one, it's time to revisit it and make sure that everything that's in that plan is current and that all of the contacts, current information is included in there. Some things specific to getting your SQL Server back up in place. You need to know whether your SQL Server's databases are in simple, full, or bulk log recovery mode. Those terms might not mean a lot to you, but just know that this is important for whoever's going to get your SQL Server back online, which is the backbone of the Sage 500 system. Depending on which recovery model you're using, will dictate not only how current you are going to be able to restore your data to, but also the method of getting that data restored. You also want to make sure that any backups that you're taking of your server in general, your SQL Server in particular, you want to verify whether those backups are happening to tape or to files on disk. And those backups, whether they be tapes or files, should always preferably be moved off-site at some point. So if you're taking a full backup once per night of your database, hopefully you've got a copy of that that's then getting sent off to some exterior location outside of your main building, wherever the server resides, so that you do have a place that you know is secure apart from where the disaster could strike at your office. And having these plans in place don't do you any good unless you actually test the backup process, the restore process, and these recovery procedures. So you want to make sure that you've done that in advance when the pressure is not on, and not wait until you have a critical situation pop up and then try to scramble to find out, oh gosh, the backup hasn't been running for the last 3 months, or it's running but there's an error in it and I can't restore the data. So you want to take the time to make sure that that's all been buttoned up now when you have the time to do that without a panic being set in. So let's talk about some specific things that we need to tackle within 500 to close out a year. Typically, folks are doing a physical inventory at the end of the year. There are a handful of steps relating to going through the physical inventory process. And the first of those, once you've created the batch in 500 and process physical inventory, is to select which items that you want to count. Some folks may do the entire inventory at one time. Other folks may be doing cycle counts throughout the year. You've got a lot of options within the select items to count task for how you might want to filter the items that you're selecting for a count. So even if you're not doing cycle counts on a regular basis where you're taking a smaller subset of the inventory items and counting them periodically, or if you're doing a full-blown physical inventory of everything that you have in the system, you want to try and keep those together in manageable groups. So if you've got 60,000 inventory items, you probably don't want to create one batch to count all 60,000 items in that one batch. If there's one item that's got a problem with it in that batch, you're going to be stuck having to either resolve that issue or carve that transaction out into a separate batch in the back end through some SQL scripting to try to resolve that issue. So it's a good idea to try and come up with a logical way to group your items, to count them either perhaps by item type, by status, by the zone that they may exist in within the warehouse, the bin or bin location, the item class. There are a handful of options that you've got here. So pick a grouping that makes sense to you. And you can use multiple combinations of these groupings to count the items. So you could say, all finished goods in zone 1, or all raw materials in this range of bin locations, and so forth. So figure out what makes the most sense in terms of grouping those together, and then create one batch for each group. Your next option is going to be whether or not you want to use count cards or count sheets. Count cards are expecting to have only one item or item bin combination on a page, whereas count sheets will give you a list of multiple items or multiple items and their bin locations on a single sheet. So it really just depends on what's more comfortable for your end users who are doing those counts. You also want to try and determine whether you want to include blank cards when you're doing the count for any items or bins that may not be in the system as showing on-hand quantity, but you may find when you're actually out doing the physical count that items were either moved to a location and that move wasn't tracked within 500, or you've got an inventory item that came from warehouse A and got moved into warehouse B, and that move never happened within the 500 system. You want to be able to have some blank cards or blank lines on your count sheets to account for those items so that you can easily add those to your batch. The next decision point you have is whether or not you want to show the frozen quantity on the count sheets or the count cards. And there are two schools of thought here. In one case, if you've got the frozen quantity showing on the card, then if a user comes up with a count that's way off base, it'll be obvious to them that something's wrong, and they may go ahead and recount that right on the spot before turning in that count to whoever is going to update the system. The downside to showing that frozen quantity is that some people may lean on that number as being right in their mind and pay less attention to the physical count, or if they come up with a different number on the physical count, they may think to themselves, well, I probably miscounted, so I'll just go with what's on the paper for the frozen quantity. So you have to decide what makes sense there, or you are not, and there's a checkbox on the screen for whether or not you want that to include the frozen quantity or not. Once you're actually in and entering those counts, you also can select in newer versions of 500 whether the grid that shows these items that have been frozen, whether or not you look at the items that have already been counted, those that have not yet been counted, or both. So if you've got a couple of thousand inventory items in one particular batch, you may not want to be looking at everything all at once. You may only want to look at what hasn't been counted yet, and there's a radio button that you can pick within the task to click on uncounted, so it only shows you the items that you have not yet entered a count for, to simplify that process. In newer versions of 500, there's also a grid style data entry task, and you can use that grid to export the data once the counts have been frozen out to Excel, and then simply update the Excel sheet with the proper quantity that's been counted by bin, or by serial number, or by lot number, what have you. And then you can use the data porter utility to then import those counts back into the physical inventory process screen. So again, that's something that's available in newer versions of 500. If you're on version, I think, 7.4 or earlier, you may not see that. You also have the opportunity from the process physical inventory task to print missing count cards. So those would be the cards for which you have not yet entered a count. You also have the option inside the enter counts task, once you know that you've counted everything that you should have, there's a button that you can click on to set all of the remaining uncounted items to 0. So obviously, if you want to be able to validate what might be missing from the count cards, you don't want to use that set uncounted to 0 until after you've done that validation against missing count cards. Once you've done that and you verified, yes, all of these items that I haven't yet entered anything for, we really have 0 on hand, then you can go back into the enter counts task, click on that button to set uncounted items to 0, and it'll push a 0 into the quantity for all those remaining lines. Once you've completed the counts, you've got a reconciliation report that you can generate, and that report will show you all of the transactions that have been posted after the freeze occurred. So if you come in at 8 o'clock in the morning, freeze the items, you're counting throughout the day, but you also still have either receipts of goods happening throughout the day or shipments happening throughout the day, the system will capture all of those transactions that have affected inventory in or out on this reconciliation report so that you can validate the counts against what you're seeing in the system. And then you also have a discrepancy report, and that discrepancy report will show you for any of the items that have been counted where the on-hand quantity variance, so whatever the system said versus what the count said, whatever that difference is, if it's greater than the tolerance percent that you have set up in maintain inventory on the main tab, it will alert you to those items. So if you've got a tolerance of 5% set for a particular item, and the on-hand quantity variance for that item in your count batch is greater than or equal to 5%, it'll include that item on the discrepancy report. So you may say, you know what, if I've got a variance within 3%, I'm not going to worry about chasing that detail. You can set all of your items tolerance percent to 3%, and then the discrepancy report would ignore anything where the on-hand quantity variance is less than that 3%. And 3% is just a number I pulled out of the air. You have to decide what percentage makes sense for you. Okay, let's talk a little bit about 1099 payments. The good news is that there's no change to the 1099 forms that we've seen so far this year. That doesn't mean the IRS can't go ahead and make a change between now and December 31st, but at this point, there have been no changes to the form layout. So if you had used the Sage solution last year, the Atrix solution that we'll talk about in a moment, or if you had your 1099 forms modified last year to match the 2016 requirements, those forms should still work going forward for the 2017 year. In the newest version of 500, you do have the option to use Atrix, which is a third-party e-filing service. They have several levels of service. They can simply print and mail the returns for you, or they can provide e-filing for you, excuse me, e-filing for you so that they file directly with the IRS on your behalf, along with preparing the 1096 summary forms for you. And depending on the level of service you choose from them, the transaction fees will vary as well. Again, if you had the form updated that you printed forms on paper last year and know that those are good, then you can use that same process to print your forms for 2017. If you do require e-filing, then the new Atrix solution is the way to go, and that's inherent in the newest version of 500. So I've provided the link here to a blog post where we talk about the 1099 process, and there are also links in that blog post directly to Atrix's website that give you the breakdown of what their per transaction fees are and what the requirements are for IRS filing. Before you get to filing those 1099s, though, you do want to verify the data that's sitting out there. So again, I've got links here for the different 1099 forms that 500 supports and the filing instructions for each of those forms. And down at the bottom here, we talk about a couple of 1099 data activities that you'll want to run before you actually generate your forms. So there's a task in 500 called Edit Voucher 1099 Data. If you had set up a vendor and in the middle of the year realized that that vendor is now one of the vendors for whom you're going to need a 1099 miscellaneous, for example, but you had already issued some payments to that vendor before enabling the 1099 tracking for the vendor, you can use the Edit Voucher 1099 data to go back to all of the vouchers that are in that were paid in the current year, and you can basically tag each of those transactions as a 1099 reportable transaction even though they've already been posted, so that once you run the forms at the end of the year, they'll include all of the payments during the year, not just the payments that were made after you made that change and maintained vendors midstream during the year. Likewise, if there were payments that you made to your vendors outside of 500, so if you happened to migrate from some other system into 500 during the course of this year, you can use the 1099 beginning balances task to enter the dollar total of any payments that were made to the vendor before payments started occurring from 500 for that vendor. Once you've got the data correct so that you know that all of the 1099 payments have been captured in the 500 system, you'll want to review either some Explore views or some standard reports to analyze that information before actually generating the 1099s. The standard Explore views are a good start, but they don't really have everything that you're going to want to be able to do a good analysis of 1099 data. For example, you have an Explore Vendors task, but that task, even though it lists every vendor in the company that you're using, it does not include the last payment date for the vendor, and it doesn't include the 1099 type for the vendor. So even though that's a good starting point to get a list of all vendors, you're not able to really filter it down to look at only 1099 vendors that have been paid in the current year. So that's one shortcoming of the standard Explore Vendors Explore task. Likewise, the Explore Vendor Payments task doesn't include 1099 data. So even though you can run the Explore view out for all the payments that have occurred in the current year, you can't filter it to only show you those for whom the vendor is a 1099 reportable vendor. So recognizing those pitfalls several years ago, we developed 3 custom Business Insights Explore tasks that will give you the information that you need to be able to analyze your 1099 payments for the year. So we've got one Business Insights Explore task that'll give you a 3-year vendor payment history, all of the 1099 payments for vendors for whom 1099 tracking is required. We've also got another one that will show you vendors with missing 1099 payments. So as I mentioned on the previous slide, You may have made a change to the vendor's 1099 status during the course of the year, after you have already issued some payments to the vendor. So this missing 1099 payments explore task will show you a list of vendors who are currently defined as 1099 reportable, who have payments that were made that are not picking up that 1099 payment requirement. So it will identify the ones that you need to go back and use that edit 1099 data task for. And then lastly, we've got a explore task that gives you the vendor list with the 1099 type and the last payment date, so that you'll have the opportunity to get a list of all vendors for whom you are reporting 1099s, for whom you issued a check in that current year. So it gives you the good starting point to jump off and verify the data. So if you're interested in obtaining any of those explore tasks, we're offering them at a fixed fee of $200 each, or you can purchase all three for $500, and that assumes you're using the views as we provide them out of the box. You may want some customization done to those, and if you do, then just reach out to your consultant and we can talk about modifying those. But if you want to use them as is, $200 each, or three for $500. So once you've got that data all validated, you can, as I mentioned, use the old 1099 forms task, which is now on newer versions labeled 1099 forms in parentheses pre-2016. Or you can use the new Atrix solution, which is a new task on the menu labeled as 1099 forms 2016 plus. So for the 2016 tax year forward, Atrix was available, and that's why the distinction between those two tasks. If, like many companies, you're tired of having to deal with the hassle of 1099 payments altogether, there is a way out. If you start paying all of these 1099 vendors with a corporate credit card, you're not responsible for issuing the 1099 to the vendor. If those payments are made by credit card, then the issuing bank or the credit card company is responsible for doing that filing. So if you want to get rid of 1099 filing altogether for these 1099 vendors, go ahead and start paying them by credit card, and you won't have to deal with the issue at all. Okay, let's talk a little bit about pruning. On the first agenda slide, it said purging/pruning, but purge in 500 can be sort of a four-letter word because it's usually at best anemic and at worst problematic. There are, in each module, there is a post batches task, so a post AP batches task, a post AR batches task, and you can first go there to verify that all of the batches that have been entered have been either posted through or deleted. If anything shows up in those post XX batches tasks, you know that you have something yet to either post or delete. So first step is to make sure that you've got everything posted. The next step is to go into each module's setup options task and look for the data retention tab. All of the modules for which this history is maintained have a certain group of fields for maintaining transactions, historical balances, and the logs relating to those transactions or history. So before you do any month-end or period-end processing, it's a good idea to see what the retention period is in the system for these tasks. And I believe out of the box, most of the tasks will default to retaining only 24 months worth of data. And if you're using the purge process in your month-end processing task, the system will go out and look for anything older than, in this case, 24 months. If it finds anything that's older than 24 months, completely paid off for the case of an AP voucher or an AR invoice, it will then try to purge that data from the system during the process. So you want to make sure that if your company policy is to maintain 7 years worth of history in the system, you want to make sure that you go into each module and make sure that each of the settings will allow you to keep at a minimum that 7 years worth of history, either 84 months or 7 years, however the field may be displayed, so that you're not inadvertently getting rid of data that your company policy says that you should be retaining. You should always take a backup of the database before you run any period end tasks or any year-end tasks. So you probably already have jobs that back up your database. Perhaps in the middle of the night, it does a full backup. You may have incremental backups that get done during the course of the day. But you want to make sure that you reach out to whoever's responsible for managing those backups to take a special backup just before you go in and run your period end processing, or just before you go in and run year-end processing, so that you can be sure that if anything were to go wrong during that process, or if you realize that things got purged that you didn't want to get purged, you've got the ability to immediately roll back to that backup so that you can start the process over again. As I said, we don't recommend using the purge utilities in 500. There are purge options on the process period end task, and also separate task on each module's activities menu. But as I mentioned, the tasks either may spin for a long amount of time, realize that they can't purge what you wanted it to purge, and then have to roll everything back, and you wind up simply wasting time because it could not purge anything. Or there are cases where when you do a purge, there might be some records that wind up getting orphaned in that process. And what I mean by that is, if you've got a record like an accounts payable voucher, for example, that has a header task and a details task within the data entry screen, those types of transactions typically have a header file and a detail file. So in the case of the voucher, you've got the voucher header and then one record for each of the voucher lines that may be entered. An orphan transaction might occur when either the header goes away from the purge, but the lines remain, or vice versa. So in either case, you don't have matching header and detail records. So because of those downfalls, and because of the fact that disk space is very cheap, we don't recommend doing purges at all. So our recommendation would be to set the data retention limits that we talked about a few minutes ago to as many months or as many years as the data field will allow you to enter. So typically that's 999 months or 99 months, depending on the field that you're in. Just a refresher, if you don't know, our recommended order of closing modules is to do inventory first, and then close the accounts payable module. Purchase order doesn't have a separate closing routine, so when you close AP, it automatically closes the PO module. Likewise, the next would be closing accounts receivable, which will also close your sales order module. And then if you're using cash management, that would be the next to close. If you're using multi-currency, that would be next. And then finally, the general ledger module last. The manufacturing module, if you're wondering why you don't see it here, is because it doesn't have a period end task. So if you're a manufacturer, you won't have the option to do a period end close in manufacturing. So even though the period end purging tasks are not recommended, there are a few places where you can go in and safely purge some data if you decide that you don't need it. So within the purchase order module, there is an option to purge old closed purchase orders, receipts of goods, returns, and requisitions. For each of these tasks that I'm going to talk through here, it will give you the option to enter a number of months for which it would purge the data that is older than that. So if you entered 84 in the older than XX months field, it'll only purge data that's older than 84 months in that routine. And you get to pick and choose which pieces you want to purge. So we've talked about the purchase order modules options in sales order. You can also purge closed sales orders, quotes, shipments, returns, and RMAs. In manufacturing, you've got the ability to purge completed work orders. And then in the System Manager module, where you probably don't spend much time, there is an activity log. There's a report that it keeps track of things like when period end processing was run last, when a module purge was run, if you've done that, when security changes were made to either users or security groups, and when postings got pushed through the suspense account, which is the default GL account that will be used if you haven't populated it with a specific account for your company in various places. So that activity log can safely be purged after whatever retention period makes sense for you as well. You do also have the option to delete inactive users, so it's a good idea at least once a year to go through your maintain users task and see if there are any employees or any users listed in there who have left your company. Maybe you created logins for temps that you want to get rid of. You've got the ability to delete them in maintain users, which will prevent those folks from logging into 500 with the user ID. But even if you delete the user in maintain users within 500, SQL still retains that login information in the database. So if you really want to do a complete prune of deleted users, we'd also want you to go into SQL and remove the login there. Sometimes for Sarbanes-Oxley compliance, you need to do that for terminated employees. So if that's something that you need to pursue, then please reach out to us and we can work with you to either take care of that for you or walk you through that process. This might also be the time to consider deleting demo data companies. If you've ever logged in and seen the SOA company, the COA company, the CAD company, there are 4, I think, others in addition to those. Those are companies that had some demonstration data set up in them when your database was first installed, most likely. And they're intended to be there for just giving the users a place to play around, to test things through the system without impacting your live company. When you first get up and running on 500, those demo companies can be useful. What's typically more useful, honestly, is taking your live company and in that live company stored in your live database, backing that up and restoring it to a test database so that you're using your customers, your vendors, your items in a test environment. So these demo data companies may be of no value to you. If you do want to delete those, though, there is a particular order that they need to be deleted in, and there might be some manual things that need to be cleaned up in SQL in order for it to allow you to delete those. So if you want to get rid of your demo companies, reach out to us and we can, again, either tackle that as a project for you or walk you through the process. And then there are a few tables that can get relatively large over time. I've mentioned 2 of them here. TCI DB activity log. That table stores any type of back-end updates that may occur through SQL. So if you've got SQL jobs that are running that import data from a third-party system, if you've had to have either RKL or Sage go in and do a data fix for you where fields have been updated for particular records, all of those types of things typically get captured in this TCI DB activity log table. Unfortunately, if you have a support case with Sage and they see virtually anything in that table, they may tend to shy away from providing support because they don't know what back-end updates have been done and potentially what problems that could have caused. So one thing that might be prudent is to purge that on a regular basis. There's another table that's maintained called TSO pick list. So if you're using the sales order module to do shipments, every pick list that's created that then winds up becoming a shipment down the road is stored in this TSO pick list table. But once the shipment has been committed, there's really no referencing back to that pick list unless you need to, for some reason, go back and reprint the pick list. So it's typically safe to purge those for a few months back, keeping the most current couple of months, but purging records prior to that for shipments that we know have been committed. So that might be another area that you might want to consider doing some data cleanup, and we'll be happy to help you with that process. A few other best practices that we wanted to talk about. In the 2017 version of 500, they've added a new status field in maintain GL accounts and maintain natural accounts. And if you've got accounts that you no longer wish to use, accounts that have been replaced by new account numbers, or maybe accounts that are for old product lines that you're no longer selling, that sort of thing, you can go in and flag the accounts one by one in maintain GL accounts to flip their status from active to either inactive or deleted. But you can also go into the maintain natural accounts task and set that status at the natural account level, and if you do that, then there's a checkbox for whether or not you wish to apply that change to every GL account, every posting string account that's tied to that natural account. So if we used to have a revenue account for widget A, and then there were multiple variations of that natural account for different departments, divisions, locations, what have you, you can go in and make the change to that one natural account for revenue widgets A and set it to inactive, and then check the box to apply that change to all the associated GL accounts, and every posting account that had that natural account would also automatically then be flagged as inactive. So just a quick way to update multiple accounts. Another thing you want to consider is your general ledger budget process. So if you're using budgeting in 500, you've got a couple of ways to enter the new budget. You can use existing budgets and do a copy from them in the maintain budget tasks. So if you've got a budget that you used for 2016 and you want to use that as your starting point for, in 2017, and you want to use that as your starting point for your 2018 budget, then you can go into maintain budgets, copy from the old 2017 budget into a new 2018 budget, and then you've got the opportunity to do some global changes in that task by, bumping up either a single account or a range of accounts or a group of accounts by a certain dollar amount or by a certain percentage, and you can do those adjustments up or down. You can also use the revised budgets task to accomplish that for a range of accounts. Maintain budget is for one account at a time per period, and revised budget is for multiple accounts or multiple ranges of accounts at one time. You might also want to take a look at your inventory replenishment defaults if you're using replenishment. So if you have economic order quantity or EOQ or min-max, this might be a good time before year-end rolls around to review the methods that you're using, the formulas that might be involved for demand stock, safety stock, as well as purchasing requirements, right? So if your vendors have changed their requirements in terms of the volume that you have to purchase or the dollar volume or by quantity or whatnot, this might be the time to go in and review those replenishment defaults before you do your year-end processing. You can also take advantage of the PO vendor performance report, which tracks receipts of goods and receipts of invoice by vendor, by warehouse, by item. It will track some things by default, but also as you're in the receipt of goods task or the receipt of invoice task, you've also got the option for manually adding notes or adding reasons to why a particular transaction might be flagged. So for instance, if you got a delivery from a vendor that was 3 days late, when you do the receipt of goods, you can tick a box for late delivery, and then you can add a note saying that it was received by you 3 days after the date that the vendor promised you. The point of doing that is that when you get to year end, it might be time to revisit or renegotiate a contract with that vendor, and you can run this report and say, based on what we did with you this year, you were late 5% of the time. We received boxes that were damaged in transit 6% of the time, whatever. So you've got the ability to track that information in the vendor performance report if you take the time to do the data entry during the receipt of goods or receipt of invoice process. If you're a manufacturer, this is also a good time to review your manufacturing costs, look at your overhead rate calculations, look at your variances, your setup times, and so forth, and your bill of materials cost roll-up journal to make sure that the materials are all current. So before we go any further, again, just another plug for taking a backup before going into any period end processes. You can't have too many backups in my estimation. I've seen too many folks get burned by the fact that they didn't have one. So it's a good idea to take them throughout the course of the process, at each major step, if you will. So maybe before you close the AP module, before you close the AR module, you might want to consider doing an incremental backup at each point there along the way. You also want to make sure that you've gone into General Ledger when you're getting ready to create your new year and verify in Setup Fiscal Calendar whether or not that coming fiscal year has already been defined. If it hasn't, then you want to go ahead and create it. So in order to create a new fiscal year, the first thing you want to do is click the lookup button next to the fiscal year field to verify what the most recent year is that's been created to determine whether or not you need to create that new year. If you do need to create the new year, then you can click the Add Year button to add a new fiscal year, and it will automatically take the most recent fiscal year that it finds in the system and add 1 to that number. So if 2017 was the last fiscal year that was defined in the system, when you click on the Add Year, it'll assume that you want to create 2018. And it will use the previous year as the model for laying out the fiscal periods. So if you're a calendar year company, that means period 1 is going to start January 1 and end January 31. Period 2 starts February 1 and ends February 28th or 29th, depending on whether we're in a leap year, and so forth. So it will automatically populate each period's start and end dates for you. If you do need to make any changes in that screen, you can change the end date for any one period, and you want to start at the lowest period number. So if you need to make a change, you want to start with period 1's change, then go to period 2 and period 3. And I say that because as soon as you change the end date for period 1, it automatically updates the start date of period 2 to be 1 day future from the ending date of period 1. So make sure you go in that order. Once you've got the periods defined the way you want them, if you go ahead to click on either Save or Save and Finish, you might get a message that the beginning balances will be created. You should get a message that fiscal year will be recalculated. If you're using or if you have used beginning balance postings, so there's a transaction type of BB in General Ledger. If you have any of those in your GL posting file, it is possible that when the system does the recalculation for the fiscal periods, that you're going to lose some data. So this is, again, a good reason for you to do a backup beforehand. We recommend that you don't use that beginning balance transaction type in the system, but you may have inherited the system where someone already had done that, and you may have your hands tied. So if you run into an issue where you see those beginning balance transactions and you need to create a new year, you might want to reach out to us so that we can help you through that issue. In newer versions of 500, you'll also have in the fiscal period grid the option to lock or unlock all modules, as well as locking or unlocking individual periods. So when a period is, when a module is locked for a period, that means that no user will be able to post transaction batches to that period. So if I have let's say February of 2018 through the end of December 2018 as locked for all modules, that means anyone can go in and enter data for January 2018 right now, but if they try to post anything for February 2018 or later, they'll get an error message that the period is locked and they won't be able to proceed with posting that batch. Likewise with inventory, there's a separate inventory calendar that's maintained in the system. And regardless of how your fiscal year lays out, so whether you're a calendar year company that runs January 1 to December 31, or if your fiscal year ends on June 30th, September 30th, the inventory calendar is always going to be from January 1 through December 31st. And you need to ensure before you post any transactions that would affect inventory that the inventory calendar has also been created in the system beforehand. One note that I didn't mention on the GL fiscal year, there is an option in GL setup options that will allow you to create a new fiscal year by going in and doing data entry for that new year, and if it hasn't been created, the system will create it for you. You don't have that luxury in inventory. If the period has not been created yet, or if the inventory year hasn't been created yet for a transaction, it will simply bomb out and you won't be able to post it. So again, another opportunity to take a backup before proceeding. You go in through inventory management, maintenance, IM setup, setup IM options, and there's an inventory calendar button on the miscellaneous tab. You can click that button to go ahead and create the new year, make sure that the end date is correct for each period, and you'll also have in that screen a field that you can enter for the number of work days. So that number of work days is used in replenishment formulas for demand and for safety stock to calculate some things for replenishment. So you want to make sure that those days are as accurate as possible. So if you're a shop that is open 7 days a week, you want to make sure to change the defaults, which are somewhere between 20 and 23 days, I think, out of the box, to reflect the actual number of work days that you have in each month. Likewise, if your operation closes for a week at Christmas time, you want to make sure that you are updating the December period to reflect the number of actual work days that you have available to you in that period. When the inventory year is added, again, like GL, it will go through a recalculation process to recalculate the inventory transaction history for each period. And that recalculation can take some time, depending on how much transaction volume you have in the system. So you want to make sure that you're running this inventory recalc at a point in time when there are little or no users on the system. And quickly, we'll go through some information on FAS here. If you're using Sage Fixed Assets and you're integrated with 500, then you have to make sure that you're using a version of FAS that is supported by your version of FAS, that is supported by your version of 500. And you can verify whether or not you're integrated by going into AP Setup, Setup AP Options, and looking at the Integration tab. If the fixed asset accounting field's checked, and there's a database name and a company field populated, then you know that that company in 500 is integrated to FAS. If you don't see anything in those fields, then it's not integrated. If it's not integrated, you can use any version of FAS that you like. The newest version is version 2018, which was released back in October, I believe. So if you haven't already done so, you might want to consider upgrading your FAS version. And then last, security groups. So we talked a little bit about being able to purge users that don't exist in the system anymore. This might also be a good time for you to review tasks that might be available on the standard menu, which may not have been added to your menu. If you've gone through an upgrade, and it's possible that you might have missed adding some new tasks to the list of tasks that are available. So there is a utility that you can run, and I've listed the path there to get to that utility, so that you can take those standard tasks and add them to a custom menu if you're using a custom menu within 500. And as I mentioned earlier, it's a great time to review your 500 users, their roles and responsibility. Not just is the user gone, but has that user's responsibilities changed, or will it be changing going forward? So it might be a good time to take a look at what permissions each user has within the system, and either revoke things that they no longer should have access to, or add permissions to their security group for new responsibilities that they might have. Okay, that's all that I wanted to cover.